Okay, so let's have a look at the seventh adjustment for McMahon 2014 sole trader question. Provide for depreciation on buildings at a rate of 2% of cost per annum. So that's going to be the first thing we're going to do, get the depreciation for the year for buildings, and that's going to go into your profit and loss administration. I decided to revalue the buildings at 720,000. So that's going to be our new figure for buildings for cost that goes into your balance sheet as a tangible asset. And we're going to have to calculate a revaluation reserve because we've revalued the buildings. So three figures for the revaluation reserve. One is going to be the new value or the increase in the value of our buildings, the depreciation for this year that we've calculated as part of this working, and then our accumulated depreciation that we have in the trial balance itself. So once again, three steps involved with this. So step one, calculate depreciation for the buildings. That's going to go into your profit and loss and administration. The depreciation will also go into the balance sheet as a tangible asset only if there's no revaluation of the buildings or if the buildings are revalued at the start of the year. If the buildings are revalued at the start of the year, you're going to have depreciation on that new figure for our buildings for the year. And if it's revalued at the end of the year, well, then there's no depreciation on it. Step two, calculate the revaluation reserve. So three figures that go into the revaluation reserve. You'll have the revalue figure, which is the new figure from the question. Take away the cost from the trial balance. That will give you an increase in the figure. So that's going to be your revalue increase. Take this year's depreciation, which was calculated from step one. And also you're going to use the cumulative depreciation, which is from the trial balance itself. So you might have to make an adjustment on that. Those three figures are added together to give you a revalue figure. So that revalue figure or the revaluation reserve, that's put into an account until the building is sold. So it's just reserved. All that money is kind of needs to be accounted for. We actually have to receive that. When we actually receive that, then we'll move it from that account. So kind of links into the revaluation of fixed assets, that 60-mark question. So let's have a look then at these adjustments. So the first one, the first work you're going to do is the depreciation of buildings. So we're going to have a look and see how much our buildings are at cost. So a building costs us 640,000. So it's going to be 640,000. And we're multiplying that then by the rate of depreciation, which is from the question itself. So the rate of depreciation is 2%. So we can multiply that then by 2%. And that's going to give us our depreciation for this year that goes in the profit and loss account. So 12,800, that's the figure that goes into your profit and loss account and will go into your administration side of the expenses. Then it says that we've revalued our revaluation reserve. So a couple of things we need to do. We're going to take the amount of our buildings, which is 640,000. We'll do the revalue first. So the revalue, we can take the revalue figure from the question, which is 720,000. We're going to see what the new value is, or the increase in the value. We're going to take the amount, which is the cost. I suppose cost would be a better word than the amount. And the increase then that we have is going to be the difference between these two. So 80,000 is going to be the increase in the value of our buildings. Now this 720,000, that's going to be our tangible asset in the balance sheet. This 80,000 then is going to be used to help us calculate the revaluation reserve. So remember, the revaluation reserve is made up of three figures. It's going to be the revalue figure, or let's say the increase in value, which is the 80,000 that we just calculated. This year's depreciation, which we've calculated in the previous adjustment, and then the cumulative depreciation. So that's going to be looking at the trial balance and see the difference between the cost and the value of our buildings. So our buildings cost 640,000, they're now worth 545,000. So the difference between the two is your depreciation. So 95,000. Just going to check 545. 545, yeah. So we're going to add these three together. And that's going to give your revaluation reserve figure. That goes into your balance sheet in your finance by section. So that's your adjustment for your revaluation. So it says that the depreciation for the buildings, so take your cost multiplied by your rate. That's going to give you the expense for this year. That goes in the profit and loss account in your cumulative depreciation. Then you're going to take the revaluation reserve. You're going to take the new revalued figure from the question, take away from the cost. That's going to give you the increase in the value of our buildings. That figure then is going to go into your revaluation reserve with the depreciation for this year, with the accumulated depreciation as well. And the accumulated depreciation is the cost taken away the value of the buildings in the trial balance. Those three added together will give you a figure that goes into your finance by section in the balance sheet. And that's how you do the depreciation and revaluation of your buildings.